The dividend snowball's starting to gather some pace in my portfolio. I'm 5 years into it now, and it's starting to really begin to pay off, right? I've reached a portfolio of over 6 figures now, and June was the biggest dividend month I have ever received. The numbers blow me away. I never would have imagined I got to this point. I started out with a total dividend income in 2020 of £66, and I'm blowing that out the water already. So let's go over each of the dividends that I received in June, what it came to, what the hourly rate of that was, a quick look at the positions that I've got, and all that sort of good stuff. So the first dividend that paid in June was, I'm starting with the smallest, not the first, go from the smallest to the biggest, was Alphabet. That came in at £1.99. In order to get that, I've got a £1,929 position within this business. I'm 42% up, so it's well recovered from some of the drops that we saw over the course of April. I'm pretty well averaged in. The dividend yield is extremely small on some of these big US tech businesses, so 0.46%. It is a quarterly paying dividend, so I get a couple of quid once a quarter for holding £2,000 worth. You know, it's not the end of the world. Everything gets reinvested back into it, and in decades to come, hopefully that will start to bear some fruit. Clearly, the main reason I'm holding Alphabet is because of the growth within it. 40% up means that it is one of the best performing stocks within my portfolio, so I'm more than happy with it. Next up was Microsoft. As we can see it here, I'm 58% up on this. Look at that max view. Look at the year view. It's up only 11% actually, but the 3-month view, it's up 32%. So that's obviously the recovery from the issues that we saw with the Trump tariffs in April. Microsoft is well positioned to lean into AI as well. That's why the market really believes it's in a strong position for AI. Again, the dividend yield is small. It's a bit bigger than Alphabet, so 0.65%. And clearly, because I've had bigger gains and I've probably put a little bit more into it, £3,500, it has given me a dividend of £5.12. So first two businesses, massive US tech businesses, doing really well. Third one, not so well. Where is she? Right, Johnson & Johnson, what am I, 13-14% down. So it was a dividend darling for decades, and a lot of people had a lot of success with it. It has struggled recently. So over the course of the last 3 months, it is down by 8%. Over the year, it is up by 4.6%. But look, my average price in, it's a terrible average price in. So I bought it, around about there, January 2021. So I'm struggling a little bit in terms of the position with that, but I did get a dividend of £11.55, and obviously I reinvested it back into the business, so that is pulling my average price down every time I do that. The yield on this business is 3.31%, so it's a small yield, but it is a strong business in terms of revenue, and price to earnings is coming in at 16.74, so I'll keep hold of it for the time being. But it is underperforming significantly. Could that cash go elsewhere and make better money? It is only £1,500, so it represents a very small proportion of my portfolio, just over 1%. But, you know, £11.55 gone straight back into that business. Next is the one that we get every single month. That's Realty Income, Real Estate Investment Trust. It's a REIT. So basically they buy property, they rent it out, and they use 90% of the profit that they make, the revenue that they make from that, to pay out as a dividend in order to qualify for the tax benefit of being a REIT. So the yield on this is 5.55%. So it is a pretty tasty yield. The amount I've got in here is £3,311. I am down by 13%, representing £500 down. Now this one I'm happy to keep going with despite the underperformance, because it gives me exposure to property, which I don't necessarily have elsewhere. In terms of having a bit of diversification in the portfolio, it's important for me to have a bit of an allocation into property. Represents at 3,300, just under 2% of my portfolio, but we'll keep going with it. So the dividend from Realty Income was £13.42. Next one on the list is Unilever, UK consumer goods business. UK consumer goods business with a global reach, so they sell all across the world. So you get the benefits of having a UK business, not having to pay withholding tax, etc. You do, of course, have to pay stamp duty on UK businesses when you buy them, but you get that exposure across the world. So over the course of the last year, it's up by 2%. Over the 3 months, it's down by 4%. So that's struggled a little bit. I am still up by just over 10.5%, just under 10.5%. I've got £2,500 in here, which enabled me to get a dividend of £21.64. The yield on this one is 3.25, so it's pretty conservative, but I'm happy with that. I like having I don't want to be chasing ridiculous dividends. Some of them are pretty high, but I like a broad spectrum of different dividend yields within portfolio. Of course, don't forget, if you've got a really high dividend paying business, that kind of potentially could be a dividend yield trap that you have to be very careful of. And the biggest dividend that I received in June from my individual businesses was legal in general. That paid me £208.17. In order to get that, I had to have £3,670 in here. So it is a relatively sized position. for me, but the dividend is so good. The yield of it is 6.86%. It has gone down a bit because we've seen a bit of growth, so it's gone up by 5.27% over the course of the last 3 months. On the year view, it's up by 13% nearly, so it's a strong performing UK business. So you've got 13% gains on the position, on the growth of the position, but you've also received nearly a 7% dividends over the course of the year. You've got a 20% return on investing into legal in general. So obviously, clearly, I'm really happy with it. Again, the dividend got reinvested straight back into the business. If you haven't already got an account with Trading 212, by the way, if you use the link in my bio or promo code Neil, you will get a free fractional share as a result of doing so. Terms and conditions apply. I'll get a kickback as well as a result of you using that. We both win. So on to the next. So that gives me, not onto the next one, that gives me a total for my individual businesses of £261.89. I then received a couple of dividends from my ETFs. I've only got 3 ETFs. The majority of my money is within them, especially the All World and the S&P 500. The first one was my Biotech ETF, where I got £13.04. So the Biotech ETF has been pretty volatile and has struggled, it's fair to say, over the course of the last year. 3 months it's down slightly. 1 month it is up a little bit. On the week view it is up slightly. But this basically is a bunch of predominantly US healthcare businesses. Now in the long term I do absolutely believe in this ETF and I am going to continue to hold it. But the returns haven't been great so far. The dividend yield is 0.51%, and the return that I got was £13.04. So reinvested back into it. We'll keep an eye on it. Now the biggest dividend that I got over the course of June, and probably one of the biggest dividends I ever received, was from my All World, and it paid £361.03, and it is this one here, FTWG. So this is my All World that I choose. I choose the Invesco one basically because it's relatively cheap, 0.15%. It is not the cheapest one out there, but it is cheap enough for me. It's cheaper than Vanguard, 0.07% cheaper than Vanguard, so I'm happy with it. I've got the dividend version just because I like those dividends coming in. I've mentioned it a number of times now. Everyone's different in terms of your approach. It might be better for you to choose an accumulation one, but for me, those dividends coming in massively motivate me because my total ETF dividend income for the month came in at £374.07. That means that across my ETFs and my individual businesses, I got an income of £635.96. So £635 in the month, completely passive. It is the one true passive way of making income, in my view, is dividends. There's a bit of work required up front to try and find the businesses, the ETFs that you want to invest into, and a little bit of tracking that's required along the way. But basically, I've had £635 for very little work. Now, obviously, I've had to have a sizable portfolio to have this. Now, some of you won't have a tenth of this portfolio. Sometimes some of you will have 10 times this portfolio. But this, what I want to do with this is showcase what a real portfolio looks like. That's why I don't hide anything. That's why you see all the red in there as well that exists. You know, I'm not going to hide from the fact that we've got Virgin Galactic in here 90% down. I'm just waiting for that to go to zero, but it will eventually. So that £635 means that over the course, what I like to do is work out what the hourly wage I would have received. If I'd have worked the month, 160 hours over the course of the month, what does that do in terms of an annual, why do I keep bloody saying that? A hourly income, and it would have given me £3.91. So £3.91 income on an hourly basis just from my dividends, never mind the growth. I remember when I got on my first job, I was a silver service waiter. I was earning £2.88 an hour. And I bloody love getting that paycheck. So I'm beating by 50% the income that I had. Now, bear in mind, it was when I was 16. And inflation has probably meant that it might be worth a bit more than that in nowadays terms. But I'm really, really bloody happy with it. So that means for the year, I'm tracking at £1,161.55 so far received in dividends. That's an average of £193.59 per month so far, and that as an average hourly rate of £1.19. So when we look at my financial independence tracker as well, I've just pull it up here. I am now at 128,233. So the orange bar is where I need to be in order to reach my financial independence number, which is £540,000 in the next 8 years. So we are closing in on that. Time's getting tight. I could underperform that. I could overperform that. I'm well aware of that. One of the things that I had mentioned is I was going to try and create this and get it built as a tool that I could sell for a small amount of money to cover costs. But I have been through 6 Fiverr people, each one of them taking about a week of my time going through it. And none of them say that they can do it. I don't know what the deal is. It's just a compound calculation. I've even done it myself on the bloody spreadsheet. So if anyone out there knows anyone that can replicate what I've got with the dividend tracker, with the financial independence tracker, and just make it look a little bit better and a little bit more user friendly, let me know. Right, I'm prepared to pay for it. Right, there's not a question about that. I'm prepared to pay for someone to build this for me, but I basically want it being built so that people can use it, put in their financial independence number, see how they're tracking against it, track against all of their dividends, manipulate the numbers how they want. I want it to make it look a little bit prettier than it does already, with some instructions in it, and that's all I bloody want. So if anyone does know anyone, let me know. And one thing I just want to share as well is I've created an experiment. So here it is. It's called the Roo Pie. Right, what this is I've asked AI to give me 5 stocks that it think will beat the market over the course of the next 6 months. It has given me these 5 holdings here. So we've got Amazon, Mercado Libre, Meta Platforms, Micron Technology, and Uber Technologies. So far, it's doing pretty well. Now, it's just a bit of an experiment. I'm just having a bit of fun with it, but it is beating the S&P 500 already. I've only had it open a week, but I'm going to do £10 ever so often into it. I'm just going to see what happens over the course of 6 months. Can ChatGPT beat the market? I'll put a link to that pie below just if you're interested in having a look at it. Obviously, don't invest anything into this that you weren't prepared to lose. It's high risk. It's an experiment. We're relying on ChatGPT. And some of the times when I've asked it, I even asked it recently, do you still agree with those stocks that you gave me? It says, what stocks? What are you on about? So it does forget things. You have to remind it. It is still in its infancy, but we'll see how this transpires. I'm doing pretty much daily updates on it on TikTok as well, if you want to see that. So that's for total dividend income for the month, right? We'll obviously have to finish in the best possible way. We're on Tuesday now. What did Snoop Dogg, why did Snoop Dogg need an umbrella? Faux drizzle. Thanks for watching, guys. See you soon.